What's up, you guys? Welcome back to Young Money Investments. In today's video, we're going to be talking about why I am going to be hopping on Santa's sleigh and riding this positive market all the way into 2020. I want to give you my top reasons why I believe this bull market is really going to continue at least through the end of 2019, if not into 2020 as well, as we prepare for the 2020 elections, which is going to be pretty crazy. Let's give you all of my reasons why I think it is fairly safe to say we are going to see some more bulls very happy and ka-ching, ka-ching, cashing in on this bull run. Let's get it, you guys, all today on Young Money Investments. All right, you guys, so let's start off with rule number one, or kind of the reason that I believe that we are going to see in the short term a continued bull run in the markets, and that is going to be price signals. What is a price signal? What are the two price signals that I am referring to that most average Americans see that are in relation to them feeling like the markets are doing good or bad? Those two things are going to be their 401ks, and it's also going to be the value of their homes. So right now, home sales still doing very well. The value of everyone's home, when you go in and let's say you need to borrow or take out money, you want to refinance your home, or you want to take out a little bit of equity, you are going to be getting money for that. And you know what? The value of your home has been increasing and increasing and increasing some more. Along with that, with the stock market really starting to rally and continue to perk up here towards this latter half of 2019, we're seeing a lot of people that look at their 401ks and they go, you know what? I have a good amount of money. I'm feeling confident. I can go and get my children some nice gifts for Christmas. But for real, you guys, honestly and truly, when your accounts are doing well and you feel like you have all this equity in your assets or in your financials, you know, things that you own, you have a little bit more of a confidence to go out and spend more money. For example, compare this to last year, 2018, this time last year, people were not feeling as good. Even people that were maybe bulls, people that were pretty bullish on the economy, when the economy starts to take a nosedive like that, they start spending less money. And so what happens? They end up pulling back on their spending because they believe that they need to save a little bit of money as well. And it's that trickle down effect that happens with everyone. And so what happened last year around this time? Less people spent money in comparison to what I believe is going to happen this year. Going along with that, people also have a lot of access to free or cheap money. One of the things that I've seen a lot, and I've seen like Instagram stories of people talking about how to get $50,000 loans with, you know, subpar credit, etc., etc., etc. That is another sign that we're kind of towards the end of a bull run. You know, people that just think this euphoric, like free money everywhere kind of thing. But we'll talk about printing money and all that kind of stuff in another point. But I want to bring up the access to a lot of money. Banks are still lending. Banks are still giving money out freely right now because of the Federal Reserve. And because of those things, more people having access to money means more consumer spending. One more thing, you guys, if you forgot to smash that thumbs up button, please do so already. It helps out with the YouTube algorithm and it helps me out tremendously to get more people here on the channel, and I greatly appreciate that. Any help that you can provide me is greatly, greatly appreciated. Reason number two, we have record low unemployment. And this always to me is probably one of the biggest tall tale indicators that things are still going to continue to do well. Anytime you have an economic downturn or an economic recession, you have to have people that are laid off that can't afford the normal things that they were normally buying with their money, or they're not able to make the payments on the loans that they normally were making because they had a job. When people don't have jobs, that is really the biggest monkey wrench in this whole cogwheel, this whole communal system that we have going on. So when you take that away, it starts to get really nasty. Now, looking at the charts here, like you can see, unemployment rates are right there, right around 3.5%, give or take 3.2% for some demographics, maybe a little bit higher for some others. Unemployment rates are at record lows. That is a good thing for the economy. And if we can continue to see those things keep happening that way, people are going to have the money to at least continue to pay those bills that they otherwise would not be able to pay if they were unemployed. All right, now this one's going to be a little bit more controversial, number three, and that is that we are finally breaking out of the relatively flat pattern that the markets have been in since January of 2018. Now, you're probably going, Cameron, what are you talking about? We've had like that massive pullback last year around this time. We've been rallying like crazy right now. What do you mean we're like break even. Well, if you look at the chart here on the S&P 500, you'll see that literally if you flatten it out, if you took just a line, you would notice that with all those ups and downs, topsy-turviness, we are just barely starting to break out of the all-time highs. We're really not much higher than where we were maybe, compared to a year ago. And so with all those things taken into consideration, we might just now finally start to be seeing this bull run start to take place. And so where we're finally starting to get a breakout and to reach new highs, we have a little bit more margin to continue to run. One of the things that a lot of the experts have seen when a recession happens or an inverted yield curve happens, which back in September, if you remember guys, there were all these negative headlines, all these negative talks coming out. Oh, the inverted yield curve has happened, like we're gonna have a recession tomorrow. The markets will continue to rally after that inverted yield curve. So there is still a period of positivity, and usually that is spurred by the Federal Reserve cutting rates. Shout out to Jerome Powell, as he ended up cutting those rates not too terribly long ago, and he's done that a few times this year. But with us just finally breaking out, we have a substantial amount of growth that this market can continue to see before that technicality of a recession really starts to kind of set in. This is a massive machine. The US economy is it's huge. But for real, you guys, the market is incredibly large, it is incredibly big and complex, and the markets don't just switch overnight. Yes, sometimes those things happen, but overall, a recession does not just happen because of one report, because of an inverted yield curve. It takes time for things bad to really happen, and things are building, don't get me wrong, things are building. You can't offset the amount of debt that the United States has right now with more debt and think that, it's just gonna dissolve and everything's gonna be great. Doesn't happen that way. But with that being said, we are on that breakout pattern. We have a decent amount of room to run as the Federal Reserve continues to print that money. Number 5 goes along with point number 1, and that basically is banks are still willing to lend to corporations. They're still willing to lend to people. Corporate borrowing is like at all-time highs right now. It is astronomically high. Do I think that's good? No. Does that mean I think the markets are gonna crash tomorrow? Also no. With banks still willing to lend corporations and private people like you and I money, that is a sign that people are going to be able to continue this onward up cycle and this positivity that will continue to go and keep these markets spurring higher and higher. When banks stop wanting to lend to these companies and these people, kind of like Lehman Brothers and whoever else it was back during the housing crisis and that great recession that we saw back in 07, 08, that's really when you need to start to panic, is when things like that start happening, when banks are not going to be lending, and that's when you really do start to see this big atrocity and all these problems. The Fed has and will continue to print money. Inflation and money is what drives this economy, and there is no sign that the amount of printing is going to stop. And so inflation is going to continue to happen. It's going to continue to build up the economy, so to speak. And when I say build up, I really mean prop that sucker up, because it's really not building it up. They're printing money, guys. Like it's not real tied to gold. They're just printing money. But with that being said, the one thing with that is it will continue to keep the economy up. And like I said, as we look to the short-term future right now, that is a good sign that the markets are going to continue to rally. All right, now number 6 is going to be the Trump rally. So when you combine things like home sales are still continuing to be strong, people's 401ks are doing well, and the financial markets as a whole are doing well, who do you think is going to stay in office? Well, I don't want to get too political, but usually, based on statistics, the current president usually stays for a second term. And so whether you like Trump or not, he is most likely going to stay in office, and he is willing to do absolutely everything in his power to get reelected for term number 2. So some of the biggest cards that he has in his, I would say his ace up his sleeve, is the China trade war deal. That whole trade war thing will continue to run the markets up, especially when that deal gets created and actually gets put into effect. That is going to rally the markets as well, and that is going to keep things up. He is using that and pulling this out as long as he can in order to get elected for another 4 years. So honestly and truly, it leads me to believe that he is going to be able to, again, pull off this trade agreement with China. It is going to make the market super happy, and it's also going to put him in office for another term. So I think when you combine all those things, you guys, together, it creates for a very strong case to be bullish on this particular market that we're in. That doesn't mean that it's built on the most stable of foundations. Absolutely not. But you have to go with the flow and trade with the trend. If you try to fight that and go based on your principles that you believe, you're not going to win in the stock market. Unfortunately, that is not how things work. You make money if you were in ahead of the other guy that needs to buy in and believe that the markets are going to continue up. A lot of people believe that there is a lot of skepticism and bad things that can happen in 2020, but in the short term, right now, is it good to be bearish on the markets? No, it's not good to be bearish on the markets at all, because there are so many positive factors pushing, making this rally a little bit stronger for a little bit longer. And that is my take, you guys. That is my thoughts. That's my philosophy on the markets right now. I hope that this information has been helpful. If it has so, hit that thumbs up button. Please hit that subscribe button as well. Turn on the bell notification so you get notified every time my new videos drop. And I will catch you guys in the next video. Thanks so much for sticking around. I really do appreciate it. I'd love if you dropped a comment down there and let me know what your thoughts are on the markets. And I will catch you in the next video. Talk to you later. Bye.